Datavault AI Inc. regular trading is officially closed for the weekend as of Friday evening, May 29th, 2026, with the final closing price sitting at 49 cents 71 cents per share, representing a solid gain of 4.83% for the day. While that closing figure tells part of the story, the real action shifted to the after-hour session, where the stock continued to climb, settling at an updated price of 50 cents, up an additional 0.88% in extended trading. This positive momentum caps off a wild week of heavy volume and highly visible accumulation patterns, particularly around the crucial 50-cent psychological threshold. What the broader retail market hasn't fully internalized yet is how rapidly this microcap is shifting from a speculative token creation shop into a fully integrated transactional infrastructure provider. The massive catalyst behind this late-week surge was the quiet execution of a massive mutual services agreement and statement of work with Perpetuals.com Ltd. This isn't just another vague corporate memo. It is a legally binding infrastructure pipeline that connects their entire real-world asset portfolio directly to an EU-regulated multilateral trading facility via PMMTF Ltd. The immediate outcome is a projected $38 million in direct fee generation for a firm that brought in just under $42 million over the entire trailing 12-month period. That single infrastructure layout effectively doubles their recent operational scale, creating a massive divergence between institutional visibility and retail awareness. The prevailing market consensus around Datavault AI Inc. has long been deeply colored by its corporate past, with many treating it as an erratic penny stock that frequently reinvents its narrative. Many participants using standard investing sites or standard self-investing setups look at the historical chart and see the remnants of WISA Technologies, a microcap focused on wireless audio standards. The standard assumption is that the name change in early 2025 was a cosmetic rebrand designed to ride the broader artificial intelligence wave. Skeptics point to the ongoing unprofitability and a negative earnings per share of 43 cents as proof that the business model is more conceptual than cash generative. They see a microcap trying to stretch across data science, blockchain, and real-world asset tokenization all at once without mastering a single vertical. However, the emerging reality completely flips that skeptical view on its head. Under the leadership of Chief Executive Officer Nathaniel T. Bradley, the company has methodically transitioned away from its legacy semiconductor roots to operate a high-performance computing environment that functions as an absolute toll booth for physical commodity liquidity. Their portfolio isn't built on speculative digital art or questionable crypto structures. It is anchored in tangible, heavy industry assets like U.S. gold mining operations, industrial copper, domestic strategic minerals, and European iron-nickel deposits. Their total contract pipeline for the first quarter of 2026 surpassed $800 million, and they have publicly raised their full-year revenue target to at least $200 million. When an organization with a market capitalization sitting well under $500 million points to $100 million in anticipated fee recognition for the calendar year, the expectation gap becomes impossible to ignore. To properly understand the daily trading dynamics of this stock, one has to analyze the intense retail accumulation across major platforms. Traders executing orders via Robinhood stock trading and the main Robinhood app have flooded into the order book, creating massive daily trading volumes that routinely rival much larger technology companies. The platform's layout makes it incredibly easy for retail participants to absorb floating liquidity, but it also creates high intraday volatility as short-term traders cycle in and out of fractional positions. At the exact same time, we are seeing a much more deliberate layer of volume moving through institutions utilizing the Interactive Brokers platform and high-tier Interactive Brokers account structures. The presence of these institutional traders indicates that larger capital pools are quietly building positions, using Interactive Brokers' fees efficiencies to accumulate shares below 50 cents before the broader market recognizes the revenue scaling. This dual market activity creates a unique trading environment where massive retail momentum collides with institutional positioning. On one side, you have individual brokerage accounts and active self-investing participants trying to capture quick percentage swings on small pieces of news. On the other side, wealth platforms like Fidelity Wealth Management and long-term advisors managing assets through Fidelity Investments or Schwab Intelligent Portfolios are forced to monitor these microcaps as speculative satellite holdings. The dramatic shift in quarterly revenue from under $2 million in early 2025 to over $33 million by the end of that fiscal year caught many automated screeners completely off guard. While standard mutual funds or Fidelity ETFs generally avoid equities trading under $1 due to strict institutional mandates, the individual brokerage volume moving through the Fidelity mobile app and the main Fidelity trading platform has surged significantly over the past 2 quarters. Comment below how many shares of Datavault AI Inc. you currently hold in your portfolio. Taking a closer look at the corporate framework reveals an underlying architecture that few retail investors take the time to study. Founded originally in 2010 as Summit Semiconductor, the company spent over a decade navigating the highly capital-intensive world of wireless audio tech and consumer electronics components. After a sequence of corporate evolutions and names like Summit Wireless Technologies, the definitive pivot occurred at the end of 2024 when they finalized a strategic asset purchase from the privately held Datavault Holdings Inc. This move officially brought their core proprietary intelligence systems, including Datavault, DataValue, DataScore, and the Datavault Bank ecosystem under a single corporate umbrella. Instead of just manufacturing chips, they began licensing fully integrated cloud setups that allow large enterprises to securely organize, value, and extract value from massive datasets without running into regulatory or data privacy hurdles. The real growth engine for the remaining months of 2026 relies directly on the concrete execution of their specialized commodity-backed initiatives. The initial rollout under the new Perpetuals Agreement focuses on the MTB Copper project, which serves as a testing ground for their broader infrastructure. Beyond Copper, their flagship Gold Vault initiative is designed to offer direct digital exposure to physical gold linked straight to active domestic mining projects, with the company targeting at least $150 million in total issuance by the third quarter of 2026. Simultaneously, their Coppercoin program aims to lock in $100 million in issuance backed by in-ground assets valued directly against Global Comics copper benchmarks. They are also advancing the Triton Geothermal Project, a $120 million energy infrastructure program, alongside a $78 million American Strategic Minerals deployment. When you evaluate the future outlook for this asset, the forward path divides into two very distinct scenarios, based on operational execution versus macroeconomic headwind. In the bullish scenario, Datavault AI Inc. cleanly executes its token issuance pipeline, smoothly transitioning from asset creation to active fee generation via European regulated markets. If the company achieves its $200 million revenue target, the current valuation under 50 cents will appear dramatically mismatched against their corporate top-line growth. This structural expansion could force a massive wave of short covering and resale FOMO, driving the asset back towards its multi-dollar historical highs. For traders using platforms like SoFi Invest or Active SoFi Investing, this represents the classic high-reward microcap setup, where a single quarter of confirmed cash generation changes everything. Conversely, the bearish scenario cannot be overlooked by anyone managing a serious individual brokerage account. Operating in the real-world asset space requires navigating an absolute minefield of shifting cross-border regulatory frameworks and compliance hurdles. Any delay in listing approvals from European regulators or an unexpected pause in the statement of work with exchange platforms would immediately freeze their fee recognition timeline. Because the company maintains a high cash burn rate from its data science research and development expenses, any prolonged delay in fee collection would likely force aggressive equity dilution or costly debt financing, punishing current shareholders. Furthermore, retail sentiment on platforms like the Robinhood app can turn incredibly fickle. If the initial copper rollout experiences technical friction, speculative liquidity will vanish just as fast as it arrived. Ultimately, the central tension governing this stock is the stark contrast between its legacy reputation as an unprofitable electronics component business and its current reality as a rapidly scaling digital asset clearinghouse. Investors relying on generic online investing advice or standard passive allocations often miss these fast-moving structural pivots until the data is fully backward-looking. By the time a microcap shows consistent profitability on standard investing sites, the valuation has typically adjusted far ahead of the retail crowd. Whether you execute your trades via sophisticated interactive brokers trading systems or prefer the simplicity of the SoFi trading platform, managing an asset like this requires tracking the hard transaction data rather than the social media noise. The massive fee generation potential outlined in their latest market agreements suggests that the financial reality of this business is moving at a completely different speed than the general market consensus expects.